Uh, Welcome, one and all, to I think, the only panel that matters, which is about investing in India and an economy that is growing at 7% plus, a market, well, talking about the economy, an economy that is reputed for its consumer and service credentials, now strengthening it with a fast-growing manufacturing sector, a market that is now the fifth largest in the world, if I'm not wrong. Hopefully, it grow faster and faster to become one of the top two markets. It has the potential, the breadth and depth that is unparalleled, not only in emerging markets, but also in developed markets, I must say. This panel here is not come here to convince you to invest in India. You're already here, you're convinced, I believe that. This panel is here to tell you why you should spend the rest of your life investing in the country, and why this is right for your brand of investment strategy. What are the things you can do in terms of your investment strategy in India, how you can access India to the best of your capabilities, how you should be able to profit from it for a very, very, very long time. My name is Ashish Marva. I'm the Chief Investment Officer of Near Vision Wealth Management. We're a wealth and asset manager based out of Abu Dhabi, regulated by the Abu Dhabi Global Markets. We also provide a fund platform for investment managers who want to create funds in ADGM so they can distribute in the rest of the UAE or wider region in general. I have an esteemed group of people helping me here talk about India, and I will let them introduce themselves, and I'll start with the gentleman right next to me, Dima. Please start, and then we can move along the row.
I'm Dmitry Nedvetsky. I'm a Senior Executive Officer of Partner Capital, FSRA and ESCA regulated entity based in Abu Dhabi. We are a conventional broker-dealer and custodian, service in international markets, has been involved in the Indian market for the last 15 years, going, I think, from mid-2000 and seeing the transformation. Massively involved in the development of business in Gift City on transition of Nifty futures. And yeah, looking forward to the panel. Delighted to be here.
Go ahead, Suresh.
Hi, good evening, everyone. My name is Suresh Swami. I am the partner at Pricewaterhouse & Co. I've been with the firm for 25 years. I do tax and regulation for a living. And at Pricewaterhouse, we work with almost 3,000 funds which are investing into India. So I've seen the length and breadth of everyone. I mean, and every fund which is coming into India, be it a sovereign wealth fund or a mutual fund or a pension fund, and all of that we have seen. And we do their tax and regulatory compliances in India. So all my perspective is going to be based on what I see interacting with these funds.
Thanks, Suresh, and good evening, everybody. My name is Vivek Sharma. I am responsible for the international business at Nuvama Group. Nuvama is the leading India-focused wealth, capital markets, and asset management firm. We are one of the go-to players as far as India access is concerned, providing India access to global institutions across the world. We cover clients across US, Europe, Australia, and MENA region, and helping clients provide access to India, including custody services, futures clearing, and trade execution. We manage more than $30 billion of assets under management, and probably 25 to 30% of hedge fund and systematic trading firms looking at trading in India. Thank you so much.
Thank you. Thank you very much, gentlemen. I think we have a very diverse panel with different perspectives that can answer different questions. So let me start. But the India investment case is very well known. We have the demographics, the China +1, the political stability. All these are very well known. Let me start with you, Vivek. Is there anything the investors are missing amongst that is not so obvious that can keep their interest for the years to come?
Yeah, good question, Ashish. I think The unfurling of the India story has been told many times in the past, but we all feel this time the story is much more structural, much more long-term and sustainable. Few of the factors that make us all believe and convinced of why India is finally here to stay is, for example, India has never been known for its manufacturing prowess, right? But now I'm sure all of us who follow financial markets see the amount of investment that Apple is making in India, Foxconn is making. I was just today, there is a news article in Bloomberg which says that for the first time, the Apple iPhone 15 is going to be produced and sold in India on day one, right? So what I'm trying to convey is the change that the government of today has in terms of enforced, in terms of also ensuring that India is now known for its manufacturing prowess. There are incentives for companies in India to manufacture in India, not only for the local market, but for global market. And you see that trend transpiring in the form of what firms globally are doing in terms of investments in India. In terms of ease of doing business, India historically has not been known for providing the most easy access for global institutions to set up. But if you see how the ranking in India has changed, India used to be clocking anywhere between 165 to 170 in terms of ease of doing business. That has come down to 63. This has all happened in the last 7-8 years. You obviously have the regimes in terms of gift city framework, in terms of ease of FPIs to set up trading in India. I'm happy to report that as a leading custody clearing provider, we are able to enable India access for our clients in 30-45 days. Now, this was not imaginable five years back, where it used to take anywhere between 6 to 9 months. So what I'm trying to say is, apart from demographics, where average age of a working Indian is about 28 years, which is younger. India has about 90% of India's population, which is about 1.2 billion people, today have a digital identity. So post-COVID, last 3-4 years, the transformation that has happened in terms of digital identity, in terms of data connectivity, has all contributed in terms of that strong demographics and the large consumer market that always existed. And we are seeing that convert into FDI flows. We are seeing that convert into activity from hedge funds, HFTs, systematic quants. Just to throw some numbers, India cumulatively receives about $220 billion of private equity investments every year, right? That would make it one of the largest and most favorable markets for global managers to look at. India is the most liquid derivative markets in terms of daily traded volumes, both in terms of index options and single stock futures. And this is news, and this may be surprising for a lot of attendees here, but that is true, and that's generating interest apart from very strong infrastructural groundbreaking work that the government and the regulator is doing. So both the opportunity and the infrastructure around are helping India becoming a formidable force in terms of. Yeah.
Thank you very much. And I think Suresh, if you can add to it.
Sure. So I think, again, my perspective is, again, based on interaction with all the various fund houses I deal with. So what we see is there is a confluence of various political, economic, and social factors, right? That's all coming together as far as India is concerned, right? If you look at it from an economic standpoint, on the supply side, there are a lot of reforms which India has already made. So you have the lower corporate tax rate, which is there. So currently, India is at 22% corporate tax rate, right? So that's something which has been implemented. We have the GST, which is bought in. We have the IBC, which is bought in. We have our RERA, which is Real Estate Regulation Authority, which is a kind of a reform which has been bought. There is enhanced investment as far as infrastructure is concerned. So there's a lot of social, economic factors which are playing. And we see even the pension funds are now started investing in equity market. So I think that's something which investors are seeing as far as investment is concerned. If you look at it from the social standpoint, again, a lot of changes I think have been talked about, but if I were to just talk about 2 or 3 important ones, as far as, say, the female feticide is concerned, that's declined significantly in India the last 10 years. Right, the girl child is actually going to the school, and what we believe is that that's going to make a significant change as far as the Indian economy is concerned. As the girl child grows up, gets educated, she will actually change the way the family thinks about overall investments. As far as India stack is concerned, I think that's a lot been spoken about India stack, technology stack. We have Aadhaar in place, we have the UPI in place. If I were to just quote some statistics, in last 9 years itself, we have transferred about $4 billion to poor people, right? Through this direct benefit transfer. The poverty in India is actually coming down, right? So I think that's a big change which is happening as far as India is concerned. And finally, as far as political factors are concerned, we are Atmanirbhar. When I say Atmanirbhar, it is self-reliant India. It's not inward looking, it's actually self-reliant, and when a self-reliant country, you trade more globally, right? So I think that's something which is playing out. Deglobalization, you are seeing US and China trade war, but that's going to benefit India in some way. And there is digitization, there's decarbonization, and there's demographics. I think all of that is actually playing in favor of India. So I think there's a confluence of these factors which is actually helping India.
Deva, would you like to add? And while you're adding to the bullish case in India, be the voice of reason, because we three are very bullish. So tell us what could also go wrong.
Well, I think I probably start.
So let's start with the bullish argument.
I think probably there are more positives than negatives, and I think a lot has been said about the demographics. But I think one of the things that I think we should also look at demographics is not just the numbers, which are great, but the fact that it's English-speaking numbers, and also I've just come across the statistic quite recently: 20% of Indian population has a higher degree. If you think about it, it's almost 300 million people with a higher educational degree, which is bigger pool of human resources with the same stack than European Union. Is bigger than US. And they all speak English, and they can sort of easily integratable into the global economy. If you also take consideration that India is now, I think, ranked 3rd in terms of public spending on education, you can just easily see where those numbers would be going with the increase of the population and the youth of the population. I think the case is massive. I think India just generally is probably just a perfect storm of positive things that are happening. Macroeconomics, decline in European Union, I think so. Regulations, over-regulations in other jurisdictions, capital flowing. You've got the capital depth, liquidity. I think if you look at it, India is pretty much 3rd, 4th liquidity country in terms of the capital market, several trillion dollars of equity market, $1 trillion of fixed income market, very deep private equity market. It's just a very compelling case. As for what can go wrong, one more point, I think, in terms of, the friend of mine, I think last year was coming over to Abu Dhabi and was discussing his private investment in India. And on my question, I think, why India and why not Mexico or Brazil, and they were investing into pharmaceuticals. His case was, I think, well, Dima, look, the country is growing at massive pace at the moment. The country is still experiencing massive bureaucracy, massive corruption, massive inefficiency, but the government is doing and on the right path. Just think what's going to happen to this growth if Modi can achieve 20-30% increase in the efficiency. and remove those sort of bad factors that exist, I think the growth could be absolutely astronomical.
Yeah, I think you're right. The policy stability and improving the efficiency of government is one of the key criteria for and agenda items for the government.
And one more thing, I think, which I also didn't realize until quite recently, is that we were talking about manufacturing. The biggest concern that I can see, and then whenever I go to India, everyone's talking about ESG and green energy here, green energy there. What I cannot really understand is that, well, with so much ambition, with so many infrastructural projects, where the energy will be coming from. Energy doesn't have, India doesn't have this energy, natural resources for the energy, and in terms of pure electrical power, and the projects are really lagging behind, so the numbers do not really stack up. So I think that would be a major roadblock in manufacturing. So if the Apples and Teslas and everyone else would like to move their capacities from China into India, I think we would have a bottleneck.
Well, there you have an investment sector priority for India. Invest in energy in India. Suresh or Vivek, I mean, one of you, if you can tackle this question. What are the latest developments in access into India? Is anything changed in the FPI regime that makes it easier for investors, whether individually or through companies or investment funds, to come into India for either long-term investment or short-term trading if they can access the market for their relative investment strategies? So
I can probably answer from a service provider's point of view, and Suresh can probably take it from a tax and other regulatory aspects. So from our experience of dealing with global asset managers across the world, one noticeable change that we are seeing through their experiences, like I mentioned before, a few years back, and India, like we all may know, is an ID-based market, right? For any foreign investors to access Indian capital markets, you need something called an FPI license, which is called Foreign Portfolio Investments License. It allows you to access all asset classes, whether equity, fixed income, commodities now. Now, historically, this process could have taken anywhere between 6 to 9 months, but I'm quite proud to say that at our end, today we are able to set up companies and trading firms and asset management firms to access and issue this ID in 30 to 45 business days. One drastic change that the regulator made a few years back is where it passed the onus of issuing these IDs to custodians or DDPs, and we are one of them. Rather than the regulator issuing these licenses, now the DDPs can issue these licenses. And continuously there have been various things that are in motion in terms of making it easier, faster, and more seamless for global institutions to access India. And the government of the day realizes that today a global institution has, they're competing with the Singapore, they're competing with the DIFC, they're competing with the Mauritius, and you need to be on the ball to ensure that you provide the best platform that global institutions need in terms of accessing India. So, and India has a favorable tax treaty with a lot of countries, a lot of jurisdiction, which also makes FPI investing far more easier, more efficient in terms of especially derivative gains, where if you're coming from one of the countries where there is a favorable tax treaty, then you don't end up paying any capital gains on derivative transactions. So these are some of the things which the government of the day and the regulator are constantly trying to see how the experience of global institutions and manager can be further improved.
Sure. So apart from the traditional access route, right, as we spoke about FPI's directly registering, I think there are also these traditional routes and there are the new routes. So the other traditional routes are the ODI route, so overseas direct investment route, popularly known as P notes. That's something which is continues to be available. Of course, SEBI has been constantly making the regime more stricter in terms of the wanting to know the end beneficial owner. So that continues. But if you look at what is available now, we also had a session as far as Gift City is concerned. Right, Gift City now provides you access to, say, a Gift Nifty. So the entire SGX Nifty, which was there in Singapore, now has actually moved to Gift Nifty. So you can come and trade on Gift Nifty. There are single stock futures which are listed on the exchange. You can buy and sell single stock futures as well. Though of course liquidity is still a concern, but that's something which is available. You can also set up a Cat 3 AIF in IFSC in Gift City, which can go into India, and you can take a FPI license for that as well and trade India. What is also happening as far as India access is concerned, two important developments. One is India is proposing to allow unlisted companies to actually come and list on the IFSC exchange. So that's a big change. As of today, you only can do Indian companies which are listed. They can go and list as ADRs. They can issue ADR, GDRs. But unlisted companies in India, which are not listed in India, they can actually come to the Gift exchange and actually list themselves. So that is one access route which is coming.
Is it a listing or is it trading of the
It is going to be listing.
It's a market.
It's okay. A listing which is going to come up. And also the other development is today as a FPI, if you set up a fund, say in Singapore or anywhere else, you cannot have 100% NRIs investing in that. There is a limit of 49% NRI, right? You cannot have more than a single investor. A single NRI can be only 25%. All NRIs put together cannot aggregate more than 49%. Now, as far as Gift City is concerned, that is set to change. You can actually have 100% NRI fund in Gift City, and you can pool everyone there and you can invest into India. So I think those are the changes which are coming. We believe these are significant changes actually as far as the Indian market is concerned.
Yeah. Tima, from a hedge fund perspective, from the perspective of having both long and short trades, from a trading perspective, how do you see the Indian market evolving? How are you helping investors get through to that market?
Well, I think a lot has been said about Gift City, and I think moving off SGX business to Gift City. I think, unfortunately, it's still most of it is going through Singapore. I think some work still needs to be done in terms of infrastructure, bringing some technological partners into India to facilitate that. But in terms of getting exposure to India, I don't think it's been as easy as it is now. So you got the futures, you got the options, you got the futures and options in Gift City, which is now available to everyone. You have an FPI route, which gives you an easy access also, and not just access, but most importantly, exit as well. From the local market, you've got ADRs and GDRs trading in London and US. Pretty much most providers, whether it's here or in London, would be offering you total return swaps on GDRs and ADRs, which would create you synthetic short position, which...
Only on GDRs and ADRs, not on the domestic names, I believe.
Well, you can convert them if you really want to. Well, I think it's an OTC product in essence, but you can pay the full value, convert it fully into the stock, and then ask your custodian to convert it into the local stock. Okay. So quite recently, we had a conversation with some banks, and they're offering synthetic futures, which in essence also the I think kind of a swap, tailor-made, probably much more cost efficient, but probably liquidity-wise, it's probably not as great. But as I said, I think with FPI route together with, I think, all the markets that are available, I think you've got futures, you've got options, structured products, ADRs, long shorts. I think the question of volatility or ability to move in very quickly, I think has never been compelling.
Yeah. Suresh, I mean, is there hope for relative value strategies in India run by foreign investors or no? Vivek,
I didn't get your
so
question.
is there hope for relative value strategies operated by foreign investors into India or?
Definitely. And we are seeing actually India historically used to be more of a long only market, right? Traditionally, if you see the Templetons and the Fidelities and Aberdeens of the world used to set up their FPIs and access India. But what we have seen change in the last few years is the prominence of hedge funds, systematic quant funds, and HFTs, right? Who have started to trade India. So today, there is not a single large global HFT, systematic quant hedge fund firm which is not active in India. Now, what is fueling this growth or what has fueled this change are a couple of reasons, I think. One is what we call the construct of the Indian equities market, right? It's very well diversified. So Indian market is actually equally divided amongst foreign institutional players, local props, and retail investors. So that gives you a very good platform in terms of ensuring liquidity of the local market. Secondly, as Dimitri was alluding to, the fact that there is liquidity in the underlying stocks. India has about 5,000 listed companies and about 500 stocks with more than $1 billion capitalization. So there's enough liquidity. It's the most liquid index options and single stock futures market in the world, right? About index options, about close to $8 to $9 billion in terms of premium that get traded every day. So all these things, so if you're a hedgey, you want to go short, you can use single stock futures. All these things and infrastructure put together, combined with a very strong governance and infrastructure platform, I think is presenting a very strong case for alternative asset managers to come into India.
I can see that my time's up, so I thank my panel for their very excellent answers to my very stupid questions. But if you allow, we can let anybody, if they have any burning questions, they can ask. They need to ask the panel. Please go ahead. No? Okay. Well, call your broker and subscribe to the Next India product that you have. Thank you very much.